Oh, guys, apologies. Yeah, listen, we've I started this particular broadcast without the sound, so hopefully that is better. Is that okay? If you could give me a thumbs up, if you can now hear us, okay? Okay, so not the best of mornings today. Okay, so as we look through the remaining news events, we do have a Draghi due to speak from the ECB. Now he's actually testifying about the economy and the monetary policy before the European Parliament Economic and Monetary Affairs Committee. So he will be asked lots of questions about the decisions behind the ECB's approach to monetary policy. Okay, thank you, Catherine. Apologies, I'm having a bit of a dodgy morning, let's say. We had our camera decide to go for a jump off its ledge this morning as well, so I don't know what that's all about. So yeah. Okay, so I was just explaining really just after just the intro, we've just had a really explosive week last week. Yeah, apologies, Lewis. Yeah, no, I appreciate that. I started today's broadcast with the mute button. So I was literally just explaining the volatility that we've seen over the last week, and it was quite choppy volatility. It wasn't clean cut by any stretch, and we saw a lot of reversals on Friday. We saw big explosive moves on Thursday, and we saw significant reversals across the market on Friday. So we'll go into that shortly, and we'll just do a little bit of an overview in terms of showing you kind of where we're at with a lot of these markets. So this is basically the news flow. Not an awful lot today to have to contend with, but we do have German IFO news at 9, and then at 2 o'clock we do have Draghi. And the markets are very interested to hear what Draghi has to say for himself. So it just has the potential to be a little bit volatile during those periods. Okay, so that's just a little overview of the news. And Monday mornings are always very useful to take a little bit of a step back, conduct a little bit of multi-time frame analysis, and with that in mind, we can see where we're at with these markets. So we'll start with the euro dollar. So what we technically have off the back of last week's explosive move to the upside is actually a structural failure to the upside now. So if I just identify that in a little bit more detail, just sticking that level in here. So it's important that we understand what's happening in these markets. So we can see this level in here, and yesterday, on Friday, we've had an explosive move. Thursday and Friday, we had an explosive move to the upside on the Thursday, and then a little bit of a reversal on the Friday. So this is where we're at now. From this candlestick last week, we'd expect continuation, but it's important to note as well that the overall trend, I hope you would agree, is very much to the downside. Now this is very much open for interpretation because there's actually a couple of... So let's say the overall trend is very much to the downside, but we did have these markets moving sideways for a little bit, and then when we broke lower, we've now been in this kind of uptrend since over the last year. So we've got this interesting dynamic where we've sold off. So again, we kind of moved sideways during the last winter, December and January time, and then we got a really strong explosive trend related market to the downside. The problem we've had is that we've now experienced on a weekly time frame its first structural failure back to the upside. So to sum up these market conditions, it's not as clear cut as you would imagine. So what we're seeing is a nice move to the downside, creating a low, and then what we're seeing is the potential for this market to move back to the upside. So there's a lot of people suggesting that the dollar, is over. We know that Trump himself would prefer a weaker dollar, and that plays into the euro dollar sort of strengthening a little bit. The problem is, it remains to be seen whether a strong euro would benefit the eurozone anymore. So we've had this market run into these previous levels of resistance, preventing these prices from pushing higher. And a few weeks back, we ran into that same level, just below these current prices here, around the 114 level. And we've had a bit of a bullish market kick in since then. So what we have is effectively a weekly high that's going to be really quite important. It would mean, if we get closes above this level, it would mean that we're very likely to see a really strong move and continuation in the euro against the dollar. So with that in mind, and I'm just spending a bit longer on the euro dollar than I will do across the other dollar pairs. When we sort of revert back to the daily time frame, and this is why it's important to just take a step back, because it is quite useful. But we've had a downtrend, and now we are effectively moving sideways. So yes, we did have a 1 day really explosive move to the upside. We had some continuation for a relatively short period of time, and then we had this market rolling over to the downside. But effectively, if you want to discuss market conditions, effectively, yes, there is opportunities in there, but we're moving sideways. We're in a sideways moving market. I suppose a better way to show you that is that if we just take these highs in here and we take these lows, apart from this little few days of price action in August, we've just been bouncing up and down, and that's really all we've been doing in this market. So when we talk about market conditions, it's important to know that if you're wondering why you can't get to grips with the eurozone to any great extent, and the reality of that is we're in a range, a 350 pip range between highs and lows. So it does make it a little bit more difficult. So with that information in mind, we can see the really strong rejection in the pound dollar. And we're still in this downtrend. So this for us is just purely a pullback as things stand. We don't necessarily see everything. So this really strong move to the downside. We've had a pullback, and really it's the next move to the downside that will determine what's going to happen with the pound dollar. So again, we just have quite tricky market conditions. Thursday's price action really explosive to the upside, and Friday's price action more explosive to the downside. So the basic understanding for this is Thursday, soft Brexit, very positive for the British pound, and on Friday we had some hard Brexit news being released, where Europe have kind of rejected the deal, and there was a suggestion that there could be a no deal on the table and things like that. As a result, the pound sold off quite considerably. Those of you that were able to access our daily trade watch Thursday night, you would see us talk about the dollar and the potential for, yes, continuation, but also you want to keep your mind open for really strong reversals, and that is effectively what we've seen across the board on Friday. Now the dollar yen has been a slightly different market for us to look at. We have the weekly line here at the 112.87 level, and a break above that you'd expect continuation. You'd be pulling away from this descending level here. But still, as far as this market is concerned, we're kind of in this little zone here, and if we break to the upside, which would be our really high probability trade, then we're looking for opportunities to buy it. But equally, this could roll over to the downside, and we could be looking for high probabilities to the downside there. So with a number of these markets, we're still in this kind of period of a little bit of indecision, and taking it to the daily time frame, we can we can definitely look for opportunities to buy this if we get a close of the weekly high, which is the 112.87, and we're not too far away from that. So we'll see, and we watch very closely how the dollar will be getting on. The dollar Swiss is bouncing off its lows, and we've actually gapped up just a little bit on the open, and a little bit of sort of buying pressure coming into this market quite quickly. But you can see, and again, you can see the potential for this market to continue just rolling over. We have this little sort of channel forming of lower lows and lower highs. So we'll monitor this. That's why at this point here we were very interested in this market selling off to the downside. So far so good. So we just want this market to break additional lows for us to get into this market, but definitely more scope to the downside. And so that was the major level, the 97.98. We're getting a bit of buying coming in now off the back of Friday's sort of reversal off the lows. So unfortunately on Friday we did see, and it kind of complicates things a little bit, but we did see a strong reversal off those levels. And other markets like the dollar CAD and the Aussie and the New Zealand are all kind of running into strong levels of, in this case, support. And as you can see, the 128.86 is our really strong level to the downside. So if we do get a break at this level, we would be expecting a nice explosive move lower. So this is the weekly time frame. You can see the overall sort of more recent trend is to the upside. So that's why a break below the 128.86 actually represents a decent opportunity to push this market lower. Looking at it on the daily time frame, there's a little sort of downward channel in what is a much larger kind of more recent uptrend since over the last 12 months. So you can see this bottom edge. So you can see how this market is sort of range bound. So whoops, and then what we can see from here is probably where the likeliest move is for this market to continue higher, unless we get a break below that 28.86 level. So that's the dollar CAD. It could represent, if we get some strength coming in today, into the dollar, it could represent a good opportunity to buy a double bottom effectively, which is what this price action would be. So we'll put that on the watch list, let's say, especially if we start seeing some strength coming in to the US dollar. Now, similar situation, we were just discussing this recent term downtrend where the Aussie is sold off. It's been quite weak, and the dollar, certainly since the beginning of the year, has really been strengthening. And what we're doing is, last week's price action, we just bounced off this descending level, which is quite important for us. So when we look at it on the daily time frame, and we look at this price action, for us, actually, the higher probabilities to the downside. So again, that does depend on dollar strength, but we're currently in these prices here as things currently stand. and a move below this level if we just roll over to the downside a little bit. And you can see the fact that this market closed at a price point of 72.86, but it opened up much lower at 72.60. So there's a 26 pip gap to the downside, which this market has clearly tried to fill. I'll just show you this gap in a bit more detail. We'll look at it on a 15-minute time frame. So there's this gap that we've now subsequently filled. So now it's our suggestion that if we get a break below the 62 level, I think it is. Let me just double check it. So this low here, yeah, 72.62. So we're really quite close to that level now as things stand. So we'll look at the Aussie dollar and see if... So we start seeing some dollar strength creeping into the downside. We've got a little bounce off the lows there. So that could be a nice technical trade for us. And all we're doing is selling this descending level. Same, last week's candlestick really ran into this level. So we were trading these to the upside, but we were trading with much smaller risk. And because it's effectively a counter trend. Now, if this stacks up and we start making this move to the downside, then we can trade what are hopefully more normal market conditions, like these opportunities for these breakouts to the downside. So that's what we're sort of looking for, and we'll see if we get those opportunities today. So we'll definitely add the New Zealand dollar to the downside. And we're at those levels as we speak. So quite a choppy, quite a messy picture when we go back to the euro dollar, the euro pound, should I say. I'll just convert this. No, we'll leave it at the 15. Apologies. So the euro pound, and I suppose the best thing to do is to zoom in to the daily time frame. Looking at this chart, really, we're still in this period of consolidation, and it's quite a choppy period of consolidation as well. It's not easy by any stretch. We had an impulsive move to the upside over the summer, and then quite a strong reversal. And last week's price action was pretty erratic. Not an awful lot. Really horrible price action for the first 3 days. Thursday, no, in fact, the 4 days of last week were really untradable market conditions, and then Friday, really strong explosive move off the back of a potential no deal for the UK, and it really supported the euro pound. So for us, and the reality is, obviously, when things digest and markets take stock of this reaction, then the potential for a deal is obviously still very much intact. So from a fundamental perspective, I suppose there's an argument to suggest that we could even continue squeezing lower, even if it's only for a short term. So it's likely to retrace off these highs. The only concern we have regarding the euro pound is if more statements are made throughout the day in terms of different parties' positions with regards to Brexit. So a little bit volatile, a little bit too... it's too much at the whim of statements made to these markets, and very erratic and quite choppy. Moving on to the pound yen, all we're simply experiencing is a pullback off the lows, and we'd be interested to see whether this market does in fact adhere to this descending level. You can see that the weekly time frame from last week has done so pretty spectacularly. Really strong move on Thursday, really strong reversal. So it does have this descending level in mind, even though today now we are strengthening just a little bit. Bit of a mixed picture in the pound yen. Structural failure to the upside like we've seen in the euro dollar, and we'd expect this market to continue higher at this stage. So we'd expect this market to continue higher just off the back of this little structural failure. This is a weekly time frame. Again, we like to trade the trend, and this is a kind of a counter trend move recently, so it does present some sort of issues for us. It's interesting to see we've had this market gap lower and has strengthened and closed that gap. So again, if I go back to the 15-minute time frame, so there's our gap to the downside, and we had a complete reversal effectively off these lows, and we've kind of failed to break these new lows since. So that's what we're looking at, and it's kind of rolling over to the downside. So a little bit kind of too choppy for us. No, sorry, not choppy. Too many reasons not to trade it. So we'll put that to the back burner just for the morning session anyway. We'll have a look at it again in the afternoon. Nothing really going on in the gold market. There was opportunities where you'd expect this market to continue higher, and then it reverses, and so we're in a pretty tight range. What direction do we expect this market to move in? For us, it's a bit of a no-brainer, looking for opportunities to sell below this kind of range in here. We'd expect this price pushing lower. However, there is the gold market is a flight to safety for traders, so it's clearly in this period of indecision at the moment, so there is a few things to consider on a global basis, and it does remain to be seen what is next for the gold market. Either way, it would represent a strong structural move either to the upside or to the downside, so do bear that in mind. And the oil markets extending higher, so we're currently at the weekly high with the US oil, so we do like this market to the upside because of that, and you can see that this is now kind of a structural failure to the upside on the daily time frame, and the uptrend is clearly still intact. We are above the ascending level. We tried to pull away from it a few times and could never really do so, and now we are just extending to the upside, and look at the gap over the weekend from Friday's close to Monday's open, and then we've kicked on. So we've not really closed that gap if you see it on the 15-minute time frame. But that wouldn't be too unusual effectively for a market like the gold market. So so with this market in mind, we will be looking for opportunities on the US oil market to the upside. So we'll come back to this market shortly. Same situation for the UK oil. It is extending further to the upside, and this is your Brent crude oil, and we've got a nice continuation of this uptrend, and we're expecting these markets to continue higher. So what we would probably do is look for opportunities either in WTI or Brent. So we'll look to trade perhaps one or the other depending on the price action. So we'll come back to this. The interesting situation in the S&P, we had really explosive markets last week. Friday's a little bit of indecision, which you'd expect, and then today now we gap down and look to sell off. So that sends us mixed pictures, mixed messages, should I say, when it comes to trading the US equities. So of course we like these markets higher. The 26,781 to the Dow Jones is now an all-time high, and actually quite an important level. So I mean, what we like in ordinary markets is the market to pull back to the 26 228 level, come back this far, and then give us an opportunity to take it to the upside. But we never really seem to get these opportunities in the global indice markets. The pullbacks are very, very shallow, more often than not. So you never really get a proper pullback. Well, we haven't had one for quite some time. So it does make it, technically for us, it does make it a little bit more difficult. You can see the selling coming into the Nasdaq. Some of these markets have behaved quite strangely. Normally they're relatively correlated. Thursday's market in the Dow Jones was incredibly explosive to the upside, and the reason for a lot of this is the US equities were brushing aside any fears and thoughts and anxieties about the global trade war with China, and became sort of adopted quite a resilient approach and showed their strength with continuing prices to the upside. But maybe the reality is kicking in just a little bit. Of course, it's going to have impacts, and it's going to impact some of these countries within these equity baskets. Now, looking at these indices over on the European side, we have the FTSE really strengthening last week, as you can see, even gapping to the upside and continuing to the upside. The initial move was more of a potential sort of pullback off a long period of consolidation, and then Friday's move was as a result of the pound selling off. So we got quite an explosive move to the upside. Again, look at the levels that it's running into. It's running into these levels of resistance. So so it just remains to be seen. The trend is to the downside. So over the course of this week, this might give us some opportunities to see if we get this market selling off once more. So just a little bit of patience required. And the same, the Euro Stoxx is just running into this level. So actually a break above the weekly high of the 34.36 level constitutes an interesting opportunity to extend this market to the upside. So actually with the FTSE and the Euro Stoxx, we'd actually expect these markets lower, because again, purely from a price action perspective, technically speaking, all we've experienced is a bit of a pullback. So what level would we expect this market to pull back to? It's roughly in this area in here, which is where prices are exactly. So there's definitely a few markets stacking up for us. We trade momentum, we trade support and resistance. We haven't had much opportunities over the last couple of weeks, I suppose largely because a lot of these markets have been pulling back. They've been counter trend moves. So hopefully there'll be a few opportunities more in line with the kind of trades that we specifically look for, which means probably we might be able to take a little bit more risk, take a few more trades. So we've been in capital preservation mode for the last 2 or 3 weeks. Again, there's no problem with that, because effective risk management when you trade is a really, really important skill, and not overcommitting too much capital during really choppy market conditions is again a trader learning when to trade and when not to trade. These are important skills, and on occasion it's been quite important to step back from the volatility. Last Wednesday, not a particularly great day on the trading floor. Really choppy, really incoherent markets. As a result, we took a few losses. And then on Thursday, really positive, productive markets, moving with direction and momentum, exactly the types of markets we look for. And of course, then we're able to see a number that we're only in a few trades, not very many trades, but half the number of the previous day. But we're able to reclaim and make some profit out of those two really sort of explosive days for very, very different reasons. And that's why it's important to look, if you take a losing trade, keep that risk under control, and then when the time is right, you'll have these opportunities to let your winners run and start seeing your account balance grow, you know, with consistency. So let's have a look at our trading screen for the day then. Certainly for the morning session. Let's see if some strength starts to creep in to I'll take this level down here. So let's see if we get a little break above the 29.44. Might give us a good opportunity to take this market to the upside in the dollar CAD. The Aussie dollar, yeah, the level is just in there. We've had the market just bounce off it just a little bit. So let's have a look at this. The dollar CAD then so we've had a little bit of a break to the downside and a pullback, and we'd expect this market to continue higher from these levels. So we'll put we'll put the dollar CAD bottom left there on the screen. The Aussie dollar, we'll just put just above it. We'll put the Aussie and the New Zealand together. And look at this bit of price action for this market to roll over to the downside, just running into these levels of resistance. Yes, we are sort of trading into this more recent bullish behavior, but the biasness is very much, our bias, directional bias is very much to the downside, and that's what we're likely to see here in the New Zealand dollar. So we'll have a look at this on a 15-minute time frame as well. So let's just zoom back a little bit and get an understanding. So can we look at this market and expect this market to continue lower? Yes, we can. We might get an opportunity actually on this pullback to get into this trade. So it's worth looking at this market and see if we can just get a fairly small trade off. So actually you'd like this market to just push a little bit higher and then to roll over below the 66.64 and maybe put a stop loss just above the 66.70. So again, it could be a relatively 6 to 8 pip stop loss in this market, so it could be quite concise. And let's look at it on a minute time frame. So we've had the structural failure to the upside, bounce back to this level of resistance. We have had a structural failure to the downside, and now we're just getting a little bit of a pullback just once more. So had the pullback, extended to the downside, just pulled back a little bit back to this level here, and now if we get this little rollover trade to the downside, could be worth looking to capitalize on a bit of a sell trade. And we'll see how these markets can fit together. The levels we don't really want this market to break would be this level up here, the 66.69. Anything below that, and we should get this little grinding price action rolling over, would be absolutely fine. So we'll look at as far as the currencies are concerned, we'll look at the Aussie dollar top left, New Zealand dollar top right, and we'll look at the dollar CAD bottom left. And the other markets really were the euro pound does look like it wants to continue lower. But the other two markets we're going to look at, which we put on the bottom right hand corner now. is the US oil to the upside. And the same situation for the UK oil. So let's have a look at the US oil first. So we've had the move to the upside, we've pulled back just a little bit. I think this was an old level sitting in here, so we'll change this level just so that we can work with. So there is a level of resistance in and around these sorts of highs, but we can look at this on a smaller time frame, and we could even look to. So let me change this level now, because this is an intraday level. So the difference between the two colors are quite significant. Intraday levels we look at normally on smaller time frames, and the blue levels are normally more significant sort of daily and weekly time frames. So we know if we're pushing to the upside and we break above, this is the weekly high here, the 71.98. So we're currently above that level, which gives us a certain degree of confidence that this market's going to continue higher, and we've got our level just above this, just up here, the 72.56, and we're likely to at least squeeze up to that level as things stand. And we'll see how price behaves at that 72.56 level. Okay, so this is kind of the rejection that we were looking for. Let's see if we get this across the board. So now if this market rolls over to the downside, we get a relatively high probability trade to the downside at the 66.64, and our stop loss just above the 66.70 level. So it just has the potential to be a small, but from a multiple of your risk, a nice profitable trade on that one. So again, the same situation applies. What we don't want this market doing is rolling below the 29.32. That means we might need to look for opportunities to buy it at a much lower price. But if we get this market just bouncing off this 29.32 and we break above the 29.45, then it could give us an opportunity to buy this market. The only one that's not really giving us much to work with, mind you, let's look at these on 5-minute time frames. So again, if we clear these highs, we've had a really strong pullback off the lows. We've attempted to make a new high and it's failed, and now we're potentially looking to sell this market around this kind of price area to see if we get this market squeezing lower, and it would represent a decent opportunity. If we look at it on the daily time frame, we're just looking to expect a bit of selling coming in. Now it's not willing to do so just yet, clearly, but you know, we can just exercise a little bit of patience really with it. And this is the thing about trading, you see, we only want to get into trades if they conform to our analysis. And if they don't, if they start breaking above these levels, or breaking above this level here in the Aussie dollar, if they start breaking above this level, then it's clearly not conforming in the direction in which we want these markets to move. So in many respects, it's a way for us to sieve out the better trades. So we go through obviously a bit of a process where we end up looking at these markets, and of course we can't guarantee whether any one of these markets are going to move, but if they do, we'll be looking very, very closely at them. Let's look at the UK oil in a little bit more detail. Because this attempt to kind of close the low didn't really last too long. So we've had a strong gap up, little pullback, and then we've had this extended move higher. Do let me know, guys. Do use your chat box if you do have any markets that you'd like me to look at. I'd be happy to do that for sure. Maybe there's other markets that you're watching closely. I think it's probably important to say that we're very comfortable with the type of trader that we are. We look for momentum, we look for direction, we look for support and resistance, we look for our understanding of Japanese candlesticks. We know the types of trades that we look for. And we also know that over the last 2 to 3 weeks, we haven't had a huge amount of those types of trades, the trades that we're extra comfortable trading. We have had winners and losers come in and out quite regularly over the last 3 weeks, which we're not overly surprised about, because that's the way that the markets can work sometimes. So, but I suppose the point I'm trying to make is it's important to know what type of trading conditions you enjoy, fitting in with your availability and the amount of capital you have available, and looking at things like protecting your capital and positive risk rewards. That's what these trading sessions are hopefully going to instill, is a certain kind of approach and a methodology. If you're adopting an approach which is scattergun without any really coherent plan in terms of what you're looking to trade, and most importantly, why you're looking to trade that market, I suppose if you can't answer that question, for what reasons are you getting into this market, then you're going to find trading a very, very difficult pursuit, and that's why so many traders have so many. That's why it can be so difficult. Now, we don't stress for a second that trading is easy, and we do know that there's many educators out there that will tell you that. It's a skill for life, yes, and it's a very lucrative environment, yes, and those that know what they do make a disproportionate amount of profit off their trading capital. Yes, all of that is in keeping, but we're wanting to use a modest amount of real capital when we trade. All of these are real trades that we take. We don't use a dummy account or anything like that. And the reason why that's quite important is you can then start to fine-tune the psychology behind even winning trades or losing trades. Like last Wednesday, we were looking a lot at the psychology of losing, and actually on Thursday, the very next day, we were looking at the psychology of winning. And actually, in both situations, you keep yourself fairly level-headed. You don't sort of freak out when you take a few back-to-back losing trades, and similarly, you don't jump around the office if you take some winning trades the following day. So keeping kind of a neutral approach to trading these markets from a psychological perspective is quite important. TheLiveTradeRoom, we've worked with thousands of traders over the years, and more often than not, it's a real difficult one, and they probably don't know necessarily what type of trader they are and what opportunities they look for, and that's one of the first things we'd work with them on is what's your time availability, how much time can you commit to these markets, how much capital do you have, and then if so, then you can start looking at positive risk reward and the technical aspects to trading. So these are the US oil and the UK oil markets. After sort of Thursdays and Fridays move, wouldn't be overly surprising to have a bit of a slow start. That may or may not be the case. So we know the markets we're looking for. So what we'll do is we'll have a look at all of these markets on a 5-minute time frame, and I'll just identify the levels that we are looking for. So with the dollar CAD, we're looking for this market to actually break above the 129.45, and if so, we have a relatively short and concise stop loss just beneath this low. But we do need to see this market break that level. We don't really want to be getting into it, with this current price action. It doesn't give us that high probability aspect that we look for. The Aussie dollar, the trade that we're looking for is a kind of a structural failure off a pullback below the 72.62 level, and this same level in the New Zealand dollar would be the 66.64 level. And yes, and the US oil, the WTI oil markets, we're seeing this little move. We want to go with this trend to the upside. We're above the weekly high, the 71.98, which is above the $72 level, obviously. And if we get a little bit of a break above this, we can place a stop loss just beneath this level in here, and hopefully get a nice little move to the upside. So what we don't want to see is structural failures to the upside in these markets. So we're looking at these levels closely. I can see the Aussie dollar potentially threatening to squeeze above it. And we're quite accurate on these levels. As you can see, the actual price there is really quite important. And what we want to do is we want to see these levels be respected. We want the market to kind of fit in with our approach and our analysis, and if that's the case, then we feel a lot more confident getting into this market when it breaks below the 72.62. So we're only 9 pips above that, but we do want this high to be the integrity to be maintained, and we don't really want these prices breaching these levels. Same here for the dollar CAD. So we're just getting the New Zealand dollar. So what that is telling us is that there's a little bit of dollar weakness beginning to creep into this market again. And if we just see the dollar CAD now just switch lower. Yeah, good morning, Connor. How are you doing? How did you get on last week, Connor? I'm not sure if you were able to join us last week or not, but okay. So what we're literally seeing here is a little bit of dollar selling creeping in. So the US dollar is weakening, and the Aussie dollar, New Zealand, and potentially the CAD are all strengthening. I'm sure that's probably a similar situation across the board. Yeah. So the euro dollar is strengthening a little bit off these lows. Even the pound dollar is strengthening. There's still a lot of strength in the dollar against the yen. So there is a couple of mixed messages. Like the Swiss is, the dollar is still kind of strong against the Swiss, although it's relatively weak against the euro. And that's interesting to get a bit of a rejection of those highs. Okay. And of course, we don't necessarily want the crude oil markets breaking lower, but we do have the $72 or the 71.98, which is last week's high, just below these levels. So if it does come back to that level, it might just give us an opportunity to buy this market at a slightly lower price. So interested to see whether the New Zealand dollar will pull back before the close. No. So this is the only market out of the three markets to actually close above that. So this is now a structural failure to the upside on a 5-minute chart. And we're getting a strong bit of selling coming in as well. So all right then, Connor. So you made a bit over 1% last week, but found it a difficult week with not a lot of clear trading opportunities for you. Well done on making some money last week, because it was a particularly tough trading week. I suppose there was a lot of momentum and volatility kicking in on Thursday and Friday. Some of those a little bit more coherent than others. So well done for actually making money in what was a pretty difficult week. There's definitely easier weeks to make money trading these markets, and it's definitely a little bit of tough trading conditions, to be fair. Like it almost feels like the summer's kind of extended into the first 3 weeks of September. So very well done on that. And yeah, I would kind of largely agree. It was quite a difficult week. Not a lot of trading opportunities, certainly for the trading opportunities that we ideally look to trade, and that's what we would like to take out of last week's trading. So all in all, well done. Right, guys, I'm just looking at the time. What we're going to be doing is switching over to the live trade room now. Apologies, we're running just a few minutes late. So we're going to continue to look at these trades and see if we get any opportunities, maybe even at slightly higher prices in the Aussie and the New Zealand, and maybe even at a lower price in the dollar CAD. And the US oil, if it does come back to the $92 level, that wouldn't be a bad thing. That would be its natural level of a bit of purchasing coming back into the US oil market. So we've got our trade plan. We're going to see if we can capitalize on any of these moves over the course of the session. We have the New Zealand dollar just extending a bit higher. It'd be interesting to see how the dollar CAD gets on. So we're going to switch across now. Please do read the description below. If you would like to join us, you're very welcome to do so. We're currently, I think, for the remainder of this week, where you can join us. You can access a 14-day free trial. So feel free to click on the link below. You can join us with no strings, no obligations of any kind. And then if you wish to join us, it's just $9.99 per calendar month. So hopefully you'll find it really, really affordable as well. So on that note, guys, thank you very much for joining us. To let you know that you can also connect, and if you can subscribe and give us a thumbs up, that would be great below. But subscribe to our YouTube channel. You can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen now. So thank you very much for joining us. Do take care. We look forward to seeing you next time. So from everyone here at the Live Trade Room, take care and bye for now.